Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, my favorite real estate guy, Fabian Calvo. Fabian, thanks for joining us today on USA Watchdog.
It's a pleasure, Greg. Thanks for having me on.
Well, you handle, $100 million worth of distressed debt a year at the notehouse.us. So, and not only do you see the stories on the front side of the news spectrum, but you're at the table with people buying 100 or 200 or 300 houses at a crack at sometimes. And I want to talk to you about this rise in real estate. And a friend of mine who trades, I said, I would never imagine that we would get to a point where, people were worried about a 2.5% 10-year yield, which is how mortgage rates are set. And he said, dude, it's not that we're at 2.5, it's how fast we got there. That we had a 30 or 40% rise in a very short amount of time. 2 months ago was, 70 or 80 basis points lower. Are you worried about the speed at which interest rates shot back up?
I'm not, because I believe that the Fed will just continue to ease. I mean, all this interest rates shot up because of rumors that basically Bernanke was going to taper. Well, that's nothing new. He's always said he would taper on the easing if the economy improved, but we both know the economy is not improving. So, with respect to real estate, I think we're at this end of the road. I've talked about this before. We're in this inflationary cycle that will end up in some kind of bust. So right now, I don't think it's going to really affect real estate prices that much, because most of the real estate that's being purchased is being purchased for cash. And these people are looking for hard assets to help with this inflationary trend. So I don't really think it's going to be that much of a lag on real estate until we enter this second stage of this pump and dump that I talked about, which is when they're going to start to roll out with the no money down loans. I mean, banks have gotten a lot of money from governments. They haven't lent it out, but this administration, the Obama administration, it's happening in the UK. They're petitioning these banks to lower the lending requirements so they could, return back to 2004, 2005.
So you're telling me they're just blowing pretty obvious they're blowing another bubble all over again. What happens if rates do go up? Does this kind of hurt the dump part of their pump? I mean, right now they're wanting real estate prices to go up, and they've got them to go up. They did get them to go up some. We're not back to the 2005 and 6 levels, but they did get them to go up 10 or 15%, maybe a little more in other markets. Does that hurt their plan if they lose control of the interest rate spectrum?
I think if rates go up a few points, it's not the end of the world. I mean, it definitely hurt. It hurts. Obviously, real estate interest rates go up. People can't borrow as much, so they can't buy as much home. That's pretty obvious. But again, right now, this is a cash market. I think this whole interest rate thing is very short term. I think they're going to go back to, where they were 30 days ago, 60 days ago. Because again, Greg, what people need to understand is that this time around, it's unlike, after the dot-com collapse or after the housing collapse. This is something right now where if Bernanke stops, if the Fed stops printing money, the housing market completely falls apart. And they're not going to let that happen because they need the housing recovery to continue. And I'm not even saying it's a real recovery. It's all happening artificially. I mean, I see this. Banks are still swaddled with toxic debt, toxic assets. I mean, I review their balance sheets all the time. So there's no way they're going to let that happen. There's no way they're going to allow the banks to keep this toxic debt. They need to create an environment where home prices are skyrocketing, where they could sell off all this toxic debt, and they could basically create, hopefully, they hope, another boom that's going to last and get this economy going again. It's not going to roll. It's not going to happen that way. I mean, I think at the end of this inflationary stage, like Mises talked about, there's going to be another collapse or another what he called the crack up boom.
Well, you said that you look at the balance sheets of these big banks all the time. What are some of the banks that you look at and go, oh my gosh? I mean, the Fed, the former Federal Reserve Governor Honing, who's now at the over at the FDIC, said that the balance sheet of Deutsche Bank is ridiculous. It's horrible. I mean, if anything happens, I mean, they're in trouble. Is that one of the banks that you look at their balance sheet and say,
I mean, I do a lot of business with Deutsche Bank, and I got to tell you, they have a tremendous amount of toxic debt, not just in the States, but around the world. What's interesting, though, is that a bank like Deutsche Bank is giving $1 billion loan to a private equity firm to go out and buy real estate. So these big banks are fueling this. they basically sit on the board of the Federal Reserve, or they own the Federal Reserve, so they can print the money, they can get the money, they can lend it to these private equities or hedge funds that are then going to go and start buying up their toxic debt. It's just like this revolving door of debt and insanity, really, if you will. But these big banks, Deutsche Bank, I know for a fact, and many of the others, have still a tremendous amount of toxic debt. And yeah, of course, it's all rehypothecated too. So there's multiple claims. The banks own these things in big pools, right? Let's say they buy them and sell them in big pools. And many times they don't even know, the bondholders, the people who own this stuff, there's multiple, people that might own the same real estate note, might own the same real estate property. So especially investors, they need to be really, really careful in this type of climate, because this is a debt super cycle, and along with the debt super cycle, there's going to be a lot of people that are going to be fighting over the same piece of property, or it's just like in the gold market, right? People that are going to fight over that same bar of gold, claiming that they own it.
So you're saying that you already know for a fact that there are multiple owners on the properties that are being bought and sold by these big blocks, these big groups of people. You're saying there are multiple owners, and there'll be fights over individual pieces of property saying, no, I own that. No, you don't own that. No, I own that. That's what you're telling me?
On the big mega banks like Deutsche Bank, yeah, absolutely. Because what's happened is that they package these things up, they resold them, and they rehypothecated them over and over again. So there's multiple claims. Now, right now, we're in this global rush for hard assets. It's only going to continue. I think, more and more you're going to see. It's another big thing I see in the real estate market is people from all over the world. Really at an unprecedented level, especially the Chinese, a lot of people in Europe and a lot of the countries that are failing over in Europe are coming to the U.S. and buying real estate because there's a global rush for hard assets. So as that rush continues, yeah, I think there's definitely going to be people that are going to have, a couple different parties that'll say, hey, wait a minute, no, I have the right of owning that piece of property. And here's the paperwork. And then the other group will have the same thing, because there's been a lot of screw ups, the way that they've tried to deleverage a lot of this toxic debt.
That's unbelievable. The sharks will be fighting one another over the same piece of meat, basically.
That's a good way of putting it.
So in closing, how long do you think this is going to go on? I interviewed you 6 months ago. You said 12 to 24 months. So I guess 6 to 18 months?
Yeah, we're into it already 6 months, as I've been saying. A lot of people have been saying, nope, it's going to collapse tomorrow or next week. Look, it could. Black Swan event could happen. World War III could break out. Anything could happen. All those are probable events. In my opinion, things continue as they are. We'll see another 6 months to even 24 months possibly of just this continued asset price increase, because the Fed does not stop tapering. They're just going to continue printing the money until there is some end of the road event where this implodes. And the truth is that after that implosion takes place, for educated investors, that potentially is a great opportunity. It's one of the biggest transfers of wealth probably in world history.
So I was going to ask you, what is your escape hatch? If this thing's going to blow up, but for you, what's going on now is fine, and if it blows up, then you'll just be selling real estate at a lower price. Is that your escape hatch? You just think this is going to be a good time for real estate for people like you?
I'm not an advocate of people buying and holding. I get in and out of deals quickly when it comes to real estate. That's what I advocate for other people do as well, only because things change so quickly. We're in a climate where things change very quickly, and like as we said, some black swan event could come and completely wipe out your portfolio. So I just think that in any asset class, stocks, gold, anything, that educated investors can make money doing this, because the truth is that when markets collapse, those are some of the best opportunities. We're entering that time frame. That's gonna happen. We're gonna, in my opinion, have a real estate collapse that's centered around a dollar, some kind of bond crisis or dollar collapse. All those will happen simultaneously, I believe. So I think people better get educated, get prepared, and understand if you're investing in this market that they're one of the most manipulated markets. And I'm talking across the board here, Greg. All asset classes are manipulated at a level I think most people can't even comprehend.
Certainly real estate is.
Absolutely. The big banks are purposely keeping distressed inventory off of the market. The Fed is, I mean, come on, the Fed's keeping rates at 0%, buying back mortgage-backed securities. I mean, so it's all this collusion. I read this report the other day on mainstream media that they were trying to say that there's like a couple 100,000 distressed vacant homes. Again, in my report, there's millions and millions in my analysis. And I mean, I'm in 24 different markets across the country. There's vacant homes everywhere. I mean, people watching this can tell you, hey, I drive down my street, I see vacant homes. So they're just not being truthful with what's really going on with the scope and how big this problem really is.
So you're saying that maybe the $400,000 house of today at around 4% 30-year money could end up being, a $100,000 house 24 months from now. Is that what you're saying?
I mean, listen, if there is that monetary crisis, if there is that bond crisis and that market blows up and rates go through the roof, absolutely that would happen. That's why, right now is a great time to start thinking if you have equity in your home to potentially selling over the next couple of years, because prices will not remain the same all the time. But I think between now and potentially 24 months, we're going to see prices continue to increase because of the easing of the Fed. After that, anything could happen. I mean, the whole entire thing could just blow up.
So you're thinking that we could see after the blow up, if let's say after the blow up, when it does blow up, let me put it that way, when it does blow up, how much could get knocked off, the home prices?
I mean, if rates went up 5-10 points overnight, you could see values be cut in half. I mean, that's definitely possible. Here's the only thing that I think is different this time around, Greg, is that, again, being at the end of the road where it's not just the real estate market that's being blown into a bubble, but you have all these other bubbles too, whether it's the dollar bubble, the bond bubble, the U.S. debt bubble, the student loan bubble. All of those, I think, will blow simultaneously, or many of the big ones will. There's no telling how people will react with respect to real estate, because I think by that point, I mean, right now, look, people aren't financing it right now. I mean, yes, there's people getting financing, but in some markets, it might be 25, 40% that's financed. Everyone else is cash. So do all the cash players, when the market collapses, come out and just start buying real estate up like crazy? That's definitely a possibility. There's going to be a lot of vulture capitalists, if you will, that when this market implodes completely worse than it did in 2008, they're going to come out and they're going to be buying everything they can. I think it's going to be some of these same hedge funds that are involved in the pump and dump.
Fabian Calvo, thenotehouse.us. Thank you so much for being on USAWatchdog.com.
Thanks a lot, Greg. A pleasure.